Welcome back, guys. I hope you all had a fantastic Christmas. I was only planning to take the 2 days off, Christmas and Boxing Day, but on Monday I got a little bit of a fever, so I've been out since Monday. We're now Wednesday, so it's been 5 days since I've put up a video or even basically gone online, which has been the longest span since 2020. So just to let you know where I've been over the last 5 days, I was planning to have a break, and then I got sick, probably because I haven't taken a break in so long. But here we are, we're back. So let's crack on with the video looking at the tops and the explosive action from the last video. So a few comments that popped up recently, and the nice thing about this is that it was 5 days ago. And one of the top comments here that just came in 8 hours ago says, so far it's going just as Jason explained in this video. Bitcoin is currently at 47,000 and it looks like it's going to dump some more. So I won't take all the credit from this. It's just from my understanding and my research on the Wyckoff schematics. So just looking at Wyckoff's work here, which we'll get into in a little bit more detail. But before we do, make sure you've smashed the like button and subscribe to the channel, bell notification icon. And of course, check out the link down below for Bybit. There's $3,000 for sign-up bonuses, and just for you guys watching this channel, you can win one of four, so $1,000 of ETH if you open up an account and deposit at least $1 into Bybit before January 3rd. So that's when we are reading out the winners for the Ethereum. So it's $4,000 worth of Ethereum, $1,000 for four people. So one lot, four times. All right, we get the point. Let's crack on with the next step. And of course, we're going to keep referring back to this video as well, because it's essentially looking at the Wyckoff schematic, and we just keep following that through with our plan, and then looking at which cryptos we think are ready to take off based on what Wyckoff has specifically laid out here. The time to enter long orders is towards the end of the preparation for a price markup or bull market, accumulation of large line of stock. So basically you want to enter towards the end of the accumulation zone so you can get the markup. Then you want to exit, then you want to wait. And if you want to short the market, then you basically short to get the mark down. Essentially, that's all we keep doing in trading over and over and over again. You can do it as an investor, but essentially investing, you just look to buy and hold for years and years and years. So most people are actually trading, although they like to say that they're investors. So let's look at the fear and greed. Now, the reason I'm bringing up the fear and greed is, one, it's a really good indicator to let us know when we should be buying and selling in the markets. And what you can see now is the fear has dropped. It's nearly at extreme fear again. So this is at 27. And once it gets to 25 or 24, it drops into extreme fear. So you can see that we were on the up. We had higher lows. We had equal tops. And then we broke out. Everything was looking rosy. And then we crashed back down. Now this is basically what we said was happening. So look at the 24th. We were starting to push up here. And in this video, so 5 days ago, that's specifically what we're looking at, referencing back to May and June, looking at that specific period in June where the market moved up, everyone gets bullish, everyone jumps on late, market crashes on them, and then they get scared, dump out of the markets, and repeat the same failing pattern yet again. So Bitcoin has moved up, it tried a second time, it failed, dropped. We've got a fair bit of volume come in here, which is nice to see, and that the low was higher than the previous lows here. The only not so good part is that we have closed beneath the 50% level. So we tested above 50, we're back under the 50. Basically, provided we stay, at least one, we stay above the 45K, the next level here of support is 42K, and then the major is, you could call this low here, which is at 39.6, so 39,600. So this is pretty much just churny noise. You're going to hear bullish news, you're going to hear bearish news for any time that we are still trading between 42 and around that 54K. And so this 54K number is my second target. You know, this has been sitting on the chart now since the 4th of December. That's when this crash low came in, and the market needs to get back above the 4th of December. That's to look at that short-term bullishness to come back into the market. And then our 50% level is at 55,600. So that's for this downrange 50%, while the 4th holds in here. So essentially, this is just more noise. I could use this for my long-term positions to enter those positions. So something like my superannuation fund, I could be getting in and buying some more in my super because that's a longer-term play. So these are good dips. But in terms of trades, it might be something that I hold out on. And we'll look at some of those trades in a moment. We're going to look at things like Matic, DOT, and a couple of others which are looking like they're in a slightly different play, something that's towards the end of that accumulation that Wyckoff has talked about right here. So the problem with a lot of new traders is that they come in and they want to be buying all of these dips. So you can see this schematic play out here. They're basically trying to buy all of the dips, and the dips keep going down. You've heard me talk about it before. Not all the dips are created equally. There's always more and more dips out there, but most people don't really know what the hell they're doing, and so they just call out buy the dip, buy the dip, buy the dip, and then most people get left screwed by buying all these dips. So the safer thing to do, but it really does hit the ego, is to wait and then buy as the market breaks out of the highs. The reason why I say it hurts the ego is because you've seen low prices here and possibly here and then here again and then maybe up here and here, but you're waiting for it to break out. And that is a safer entry. But if you're looking for longer term plays and you want to buy the dips on something, say like Bitcoin or ETH as your long term plays, then that might be a better way to go. So buy these bigger dips. So just try to understand that in terms of your portfolios, your trading portfolio, and maybe a longer term position, maybe just your Bitcoin and Ethereum holds. That's the way I like to break these two up, especially when I look at these accumulation periods here. So looking at Bitcoin and the accumulation phase, let's just do a quick update here because we've looked at it many times before. You can see that this top pretty much came in as another reaction. So looking at this play right here, so automatic reaction, and then you have the tests higher up again, and then Bitcoin did the same thing and fell back down. It's pretty much what's going on here. So that's it for Bitcoin. It's pretty much following this play exactly. So let's just keep watching to see what happens and then look at what we can get into when it comes to these alts. So essentially that has called the top almost spot on. You know, we did a video on the 24th. That's basically the exact top, and now we're back down. So basically, let's not get excited when the rest of the market gets excited. Let's not buy into all of the hype, but buy into the fear when the macro picture is extremely bullish. So the macro picture is still bullish. The macro for me would not be macro bull anymore if we break 28K. So 28K is this major low through here. And then if it broke 39K, we're still macro bull, but it just seems like we would churn for a lot longer at these higher levels. So, and that could take months, weeks to months, probably more like months if we were to break down from 39K. The macro bull still looks in play, especially when I look at the futures trading volume. You can see the Bitcoin futures has been at record highs this year. The total has surpassed $32 trillion. Essentially, this is just the amount of money that's trading hands and people actively trading Bitcoin and Ethereum. Sure, this could be the same in a bear market, but we're still seeing higher lows and we're still seeing increased activity across ETH and Bitcoin as futures being traded. And you can see January was on Binance 256 billion for Ethereum, and we're now at 360. So these are generally getting higher over the course of time. Now ETH is doing its thing. It's still above its 50%, which is 3,300, 32, 33. Not much has really happened since that video there on the 24th, which was pretty much at that top. And I know I've titled this video something around the lines of, calling the exact top, or, this is why the exact top happened. The exact top happens because of prices getting marked up and marked down. That's it. We could throw it to some news. We could throw it across to some fundamental. And yes, that will definitely have an effect. but you can see this happen on the chart before those pieces of news or information comes out. And so if you're following this closely, looking at your markups and markdowns, looking at the distribution and the accumulation, checking out where each of these points come into play, then you'll be one step ahead of those who just keep feeding off the constant news and noise that's out there. So really, Ethereum's basically where it is about 2 weeks ago at the same price here of 3,800. As for DOT, I've got a different 50% in here today. I was using the major, which it had broken above. I think it's just sitting on top of it now. Thereabouts. Yep, just sitting on top. But if I use the recent range here, it came up, hit it, and dropped back down. So I could play this in two ways. I could use this as a rejection and say, well, this is probably going to go lower if the market breaks back down below $23.20, and therefore I would just keep waiting. Or I just keep using my Wyckoff schematics here and just wait to see this accumulation period take place. It could be a distribution, it could be an accumulation. That's why we got to see what happens over the next few weeks as it got rejected at 50%. So if I saw this come down, make a higher low, and just keep churning out through this area, then finally break above, that would be my signal to say, well, it looks like DOT is finished accumulating at these prices and it wants to break higher. Therefore, I can enter at 32, or I could take the risk, enter lower in the mid-20s, but have a firm stop and say, I will exit at these levels right here. All right, at that low of $23. That's how you would play this safe and enter at a lower price using your risk and reward. Taking a look at Matic, which has been a big one for us. Again, the 24th came in on this day right here. This is Matic against Ethereum, and it only pretty much moved just a touch higher, and it's still holding above the 50%, so that's good news. Let's look at Matic against the USD value. So it's at 260 now. And the 24th was this down bar. It got up and it's pretty much back to where it was on the last video at around that 24th. So that was at about 250. Now it's at 260. So overall, Matic did hit a new all-time high, but it has pushed back under the old all-time high. So I dare say that it'll churn around between that 2 and sort of 280 level for some time. It needs to get back above the 290 for this to be strong again. So yeah, it's just taking its time at the moment. Luna, this was the bar here on the 22nd that I was liking for a kind of short-term top, and it's pretty much proved just that. Now some will say, well, you're wrong, this was the top here. I say, well, this is a pretty good signal bar, high volume, key reversal. If you look at this on a candle, you've got the shooting star here. It's at the end of a long range. So when you have all of these patterns coming in together, it shows for a really, really good signal here. And if the market is that little bit stronger towards the end, it'll push up just past it, and then it got rejected. So then it got smashed back down. Basically, if you're going to take profits on a bar that looks like it should drop from that point, and then you get your ego crushed for a few days just because the market goes up another few bucks from that point, but then you see it get crushed later, then you can really say to yourself, it doesn't matter. You just have to be patient, because eventually these signals will show you, and then that's how you build confidence in these signals over a longer period of time. Once you can marry up all of the patterns coming together in one hit. It might not be the exact point, but it gives you a pretty close indicator towards the end of a particular run. Now, could this keep going up? Sure. You'd want to see it reaccumulate, start to make higher lows, and the same thing that we always talk about on the channel, then start to break to new highs, higher lows, and the market takes off from that point. Could this be the top for now? Sure, it could. We'll keep following it as we usually do. Now, before I get to the last crypto, which I think is in a different pattern and looking to break out of its accumulation, make sure you've hit that like button, subscribe to the channel, bell notification icon. I remind you of the Bybit link down below. Just 5 more days left to get your entries in, especially for you guys on the channel. 4,000 USD of ETH to be taken out by you guys. Basically 1 ETH divided by 4 people. Get going. Link is down below. Sushi, that's where I'm going to end up at this point here. This is sushi at the moment. So sushi was looking like it just wanted to get crushed since March of this year, and it has been getting crushed since that point. A lot of people have been calling for it to be another crypto to be buying up, but you got to wait and see for these turning points. Now, the thing I like about sushi at the moment is this little bar here. This is on a weekly chart. High volume, nice strong volume, and then the market reversed from that point. Now, the volume is a little bit lower at the moment, but we're only, 2 days into this week. So we've got about 5 days left. And ideally, if we get a close above $10.20, that would put this into a much stronger position as well. So we've seen the low coming now around that $5. Of course, the lowest here was $4.30, but this little bar here, this is nice pattern to see at the bottom here. A lot of volume coming in, stopping volume as Wyckoff would call it. We had the tests, and now we're starting to break back above to get into our, what does he call it? His SOS here. So sushi is starting to make a break back above into stronger sections of its chart pattern. So I'd like to see a fallback, a bit of a pullback correction, and then that could be a good entry opportunity for a longer term play or a longer term trade on sushi. So that's what I got for you guys today. Let's keep following up on sushi. Matic is looking good. DOT still in that situation where we're waiting to see what happens from this. Bitcoin, not much else we can see from this point. Seems like it's just noise. And of course, most extreme fear in months. It's essentially what we're seeing at the moment, or at least in weeks. For this point, if we throw it back to a year, well, this was the biggest fear that we had since back in September. So definitely in months at that point. So that's what we got. I'll see you guys at the next video. Until then, have more fun to get more done.